$530 million, gone in 12 hours. That is how much money the Bitcoin bears lost on March 4th, 2026, the day the White House dropped a 12-word press release that nobody in the short camp was ready for. Bitcoin was down 41% from its peak, 5 consecutive months of losses. The trend was clear, the sentiment was broken, and professional traders across every major derivatives desk had built one of the largest short positions in months. They were absolutely certain the price had nowhere to go but lower. Then, at 9:47 in the morning, a notification hit every Bloomberg terminal on Wall Street. Kevin Worsh will be chairman of the Federal Reserve System. The shorts started moving against them, then faster. Then the cascade began, and it didn't stop until $530 million in leveraged bets against Bitcoin had been forcibly closed. Bitcoin had added $123 billion to its market cap, and gold, the traditional safe haven, had quietly fallen 3% on the same day Bitcoin surged 9%. Today I'm going to show you exactly what happened. Who Kevin Worsh actually is. Not the version the market believed for 6 weeks, the real version. Why a single nomination triggered the most violent short squeeze Bitcoin has seen in months, and why the gold versus Bitcoin divergence that happened that day might be the single most important signal in this market right now. Stay until chapter 4, because what I am going to show you there about how capital is migrating between gold and Bitcoin will change how you read every macro headline going forward. Good evening from Sao Paulo, where it is 7 in the evening on this Wednesday, March 4th, 2026. Before we dive into the charts, I want you to drop a comment below and tell me exactly where you're watching from. Let me know your exact city, your current local time, and what the weather looks like outside your window right now. It is always amazing to see how global this community is, proving that this market truly stays awake 24 hours a day, 7 days a week. I read every single comment, so if you are new to the channel, take 1 second to hit that subscribe button and leave a like. It tells the algorithm that you value deep research over hype, and it helps us keep building the smartest community in crypto. Let's go. To understand what happened on March 4th, you need to understand the setup that existed before it. For 5 months, Bitcoin had been bleeding. From its peak in late 2025, Bitcoin had fallen 41%. February alone saw a drop of nearly 15%, the worst monthly performance in over a year, marking the 5th consecutive monthly loss. In that environment, a particular kind of consensus had formed. Professional traders, derivatives desks, and leveraged funds had accumulated an extraordinary number of short positions, bets that Bitcoin would continue falling. Bitcoin sat directly between 2 massive liquidation clusters, $254 million in short liquidations stacked above $70,000, $323 million in long liquidations stacked below $65,000. Think of this setup like a loaded gun. The shorts were clustered just above $72,000. If Bitcoin broke above that level, exchanges would automatically start force closing those positions, which means they would automatically buy Bitcoin at market price, which pushes the price higher, which triggers the next set of liquidations, which buys more Bitcoin, which pushes the price higher again. It is a cascade, and the professionals knew it was there. What they did not know was what would light the fuse. On February 28th, perpetual futures funding rates dropped to negative 6%, the most negative level in 3 months. That number signals one thing clearly. Aggressive short positioning had become extreme. The last time funding was this negative was February 6th, when Bitcoin bottomed near $60,000. Negative funding rates this deep mean that short sellers are paying to hold their positions. And they had been paying long enough that desperation was starting to set in. The trap was loaded. All it needed was a catalyst. And on the morning of March 4th, Washington delivered one that nobody in the short camp was positioned for. Before I show you exactly what that catalyst was, I need to give you 60 seconds on something most people misunderstand about the Federal Reserve, because the chairman of the Fed is not just an economic figure. For Bitcoin, the Fed chair is the single most important person in the world. The Federal Reserve controls the price of money. Not metaphorically, literally. When the Fed raises interest rates, borrowing becomes more expensive. Capital stops flowing into speculative assets, stocks, venture capital, real estate, crypto. Everything that goes up when money is cheap tends to go down when money is expensive. When the Fed lowers rates or expands its balance sheet through quantitative easing, money becomes cheaper and more abundant. That capital flows into risk assets, including Bitcoin. This is not theory. It is documented history. Bitcoin's greatest bull market, from $10,000 in mid-2020 to $69,000 in late 2021, happened during the most aggressive monetary expansion in Federal Reserve history. The Fed's balance sheet grew from $4 trillion to nearly $9 trillion in that period. Bitcoin's bear market began almost exactly when the Fed started tightening. This is why the identity of the Fed chairman matters so much to this market. not because the chair controls Bitcoin, but because the chair controls the monetary conditions that determine whether capital flows toward Bitcoin or away from it. Jerome Powell, whose term expires on May 15, 2026, is known for a hawkish approach that markets have consistently associated with tighter conditions for risk assets. Kevin Worsh is his replacement. And here's where the story gets interesting. Worsh, 55 years old, previously served on the Federal Reserve's Board of Governors from 2006 to 2011 under Presidents George W. Bush and Barack Obama. He worked as a banker at Morgan Stanley before becoming a visiting fellow at Stanford University's Hoover Institution, where he wrote extensively on monetary policy and central bank credibility. His nomination was announced by President Trump on January 30th, 2026. Trump wrote on Truth Social, "I have known Kevin for a long period of time and have no doubt that he will go down as one of the great Fed chairmen, maybe the best." When the announcement first came out, Bitcoin dropped. Why? Because the market read Worsh as a hawk, someone who would keep rates high and shrink the Fed's balance sheet. Bitcoin fell sharply to between $81,000 and $84,000 after the announcement, down more than 30% from its 2025 peak. The market panicked, shorts piled in, and they held those positions through February as Bitcoin continued falling. Here's what those short sellers got wrong. They read Worsh's biography. They did not read his actual words about Bitcoin. At the Hoover Institution's Inflation is a Choice event in July 2025, Worsh said this: "Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they are doing things right and wrong. It is not a substitute for the dollar, but it can be a very good policeman for policy." In a 2021 interview on CNBC's Squawk Box, when Bitcoin was trading near $30,000, Worsh said this: "If you're under 40, Bitcoin is your new gold." And in a conversation with billionaire hedge fund manager Stanley Druckenmiller, Worsh described blockchain technology as the newest, coolest software that will provide us the opportunity to do things we could never have done before. This is the man the market spent 6 weeks treating as an enemy of Bitcoin. On March 4th, when the White House made his nomination official, the market finally started reading his actual record. Not just his reputation as a hawk, but the Worsh nomination was only the first catalyst that day. The second came from Capitol Hill, and it might actually be more important. Let's pause here for a second, because I need to ask you something highly controversial. We are looking at the United States government rapidly integrating Bitcoin into its financial infrastructure. Here's my question for you, and I want you to answer honestly in the comments right now. Do you believe Washington is embracing Bitcoin because they finally respect financial freedom, or because they are preparing to control the network? Drop your exact thoughts below, because I'm going to read every single one of them tonight. And honestly, if you have the attention span to make it this deep into the video, you are already ahead of 99% of the market. Stick with me until the very end, because the data I'm about to show you in Chapter 4 will prove which side is actually right. Let's get back into the charts. I want to stop here for a second, because if you have been watching this thinking it is just a trading video about a short squeeze, I need to reframe what is actually happening. What occurred on March 4th was not just a price move, it was a signal about the direction of the entire regulatory and institutional architecture around Bitcoin in the United States. And the second catalyst of the day, which received far less coverage than the Worsh nomination, might be the one that matters more over the next 2 years. Senator Cynthia Lummis of Wyoming went on CNBC on March 4th, 2026, and said this: "You walk into a bank, and they can simultaneously provide you with fiat currency services like the dollar, as well as digital asset services like Bitcoin. This will create a 21st century financial services industry. Banks offering Bitcoin alongside dollars." From a senator who chairs the Senate Banking Subcommittee on Digital Assets, the single most powerful legislative voice on cryptocurrency in the United States Senate. When Lummis makes that statement on national television, she is not speculating. She is describing what she is actively building, and she is not alone. The regulatory ground has been shifting for months. In March 2025, 2 federal banking regulators, the Office of the Comptroller of the Currency and the Federal Deposit Insurance Corporation, announced that banks no longer need advance permission to engage in cryptocurrency activities. In April 2025, the U.S. Justice Department disbanded its National Cryptocurrency Enforcement Team, citing a Trump order to allow citizens to access blockchain networks without government interference. Read those developments together. Banks no longer need permission to engage with crypto. The Crypto Enforcement Team is disbanded. A pro-Bitcoin senator chairs the most powerful financial subcommittee in the Senate, and a Fed chair nominee who calls Bitcoin the new gold for anyone under 40 is about to take control of U.S. monetary policy. This is not coincidence. This is a coordinated policy direction. And the short sellers who built their positions based on 6 months of bearish price action had completely missed it. Now here's the piece I have not shown you yet. Because while all of this was happening, the Worsh nomination, the Lummis statement, the short squeeze, something extraordinary was happening in the relationship between Bitcoin and gold, and that signal might be the most important data point of this entire day. On March 4th, 2026, Bitcoin rose 9%. On the same day, gold fell 3%. Let me tell you why that matters more than anything else in this video. Gold and Bitcoin are both marketed to different audiences by different people, as inflation hedges, as stores of value, as alternatives to a weakening dollar. For years, the debate in traditional finance has been, if you want to protect yourself from monetary debasement, do you buy gold or Bitcoin? The conventional answer has always been gold, because gold is established. Gold is held by central banks. Gold has 4,000 years of precedent as a store of value. The conventional wisdom says, in a moment of macro risk, when the Fed is uncertain, when geopolitical tensions are elevated, when institutional investors need to de-risk, money flows to gold, not Bitcoin. March 4th broke that conventional wisdom in a way that is difficult to overstate. Bitcoin last year was trading in line with gold as part of what analysts called the debasement trade, both assets moving together as hedges against a currency losing value. But they have since diverged. One analyst described it directly as a narrative divergence. Bitcoin is no longer being treated as a simple inflation hedge alongside gold. It is being treated as something different, something with its own distinct institutional thesis. And on March 4th, the divergence became impossible to ignore. Gold fell, Bitcoin surged, on the same news, in the same macro environment, with the same Fed uncertainty as the backdrop. What does that tell you? It tells you that a specific category of investor, one that was previously in gold as a hedge against dollar debasement, decided that Bitcoin was a better expression of that same thesis. Here's the critical question. What changes the relationship between gold and Bitcoin permanently? The answer is Washington, not the market, not on-chain metrics, not minor behavior. Washington. A Fed chair who calls Bitcoin a good policeman for monetary policy and who has personally invested in crypto firms. A senator who chairs the digital assets subcommittee saying banks will offer Bitcoin services alongside dollars. Whoa, federal banking regulators removing advanced permission requirements for crypto. And a U.S. strategic Bitcoin reserve already holding 328,372 Bitcoin, making the United States the largest known sovereign holder of Bitcoin in the world. The United States government holds more Bitcoin than any other government on Earth. And they have a senator actively legislating to acquire 1 million Bitcoin for the National Reserve, funded partly by revaluing gold certificates the Federal Reserve has held since the 1970s at a fraction of their current market value. When you see all of this together, and then you see gold fall 3% on the same day, Bitcoin surges 9%, you are watching capital migrate from the old infrastructure of monetary protection to the new one, in real time, in a single trading session. I want to give you the complete picture of Kevin Worsh now, because this channel does not do one-sided narratives. The bullish reading, Bitcoin-friendly Fed chair, regulatory tailwind, institutional infrastructure aligning, that is what we have covered. And it is real. But the full picture is more nuanced. And you deserve to understand the risks before the Senate confirmation vote. What Worsh has said that is bullish for Bitcoin. In a 2021 interview on Squawk Box, when Bitcoin traded near $30,000, Worsh suggested Bitcoin makes sense in a portfolio where the dollar is weakening. He said Bitcoin's gains had mirrored part of gold's rally, and that if Bitcoin did not exist, gold prices might have risen even more. He has invested personally in crypto startup Bitwise Asset Management and served as an advisor to Electric Capital, a venture firm focused on crypto and blockchain. He rejected the notion that Bitcoin poses a systemic threat to the Federal Reserve's ability to manage the economy, and instead described it as an asset that could help inform policymakers. What Worsh has said that introduces uncertainty. During his previous tenure at the Fed, Worsh consistently emphasized inflation risks and opposed quantitative easing, a stance seen as challenging for risk assets like Bitcoin, which has historically benefited from loose monetary conditions. His approach toward balance sheet expansion is genuinely uncertain. Since the Great Recession, the Fed purchased trillions of dollars of Treasury bills, flooding the economy with cash. Worsh has described financial markets as becoming addicted to central bank liquidity and has been a consistent critic of the practice. Here is how I read the Worsh situation after studying his full record. Worsh is not a Bitcoin maximalist. He is a monetary pragmatist who believes in institutional credibility, inflation discipline, and a smaller Federal Reserve balance sheet. In the short term, those views create genuine uncertainty for liquidity conditions. But he is also a man who said, if you're under 40, Bitcoin is your new gold, when Bitcoin was at $30,000, who invested personally in crypto infrastructure, who calls Bitcoin a good policeman for monetary policy. That is not an enemy of Bitcoin. That is someone who understands Bitcoin's role in the modern financial architecture in a way that no Fed chair in history ever has. The short sellers who got wiped out on March 4th were not wrong about Worsh's monetary philosophy. They were wrong about the timing and about the political context surrounding his nomination. Because the most important thing about Kevin Worsh taking the Fed chair is not what he thinks about interest rates. It is what it signals about where Washington now stands on Bitcoin. Let me close with the 3 things you need to watch to know whether this move has legs, or whether it was just a positioning squeeze that fades in 2 weeks. Signal 1, the Senate confirmation hearings. Worsh must still be confirmed by the Senate before assuming the role of Fed chair. Powell is eligible to remain on the Fed's Board of Governors until January 31st, 2028, even after his chairmanship ends in May 2026. The confirmation hearings will be the most important source of information about Worsh's actual policy intentions. Listen for 2 things specifically. His language around the balance sheet. Will he aggressively shrink it or allow it to normalize slowly? And his response to questions about digital assets. Does he hedge or does he maintain his public record? If Worsh's testimony is dovish on liquidity and consistent on Bitcoin, this move continues. Signal 2, ETF flows. The recovery from the February lows came alongside a reversal of outflows from spot Bitcoin ETFs, but analysts noted that the rally may be fragile without sustained spot demand, as opposed to purely leverage-driven momentum. Watch daily ETF flow data from BlackRock's IBIT, Fidelity's FBTC, and the overall ETF complex. If institutional inflows return and sustain above $200 million per day for more than a week, that is confirmation that March 4th was the beginning of a new trend, not a temporary squeeze. If ETF flows go flat or negative while price holds, that is a warning that leverage is still driving this, and a pullback is likely before the next leg. Signal 3, the gold-Bitcoin relationship. Watch what happens to gold. Bitcoin's narrative divergence from gold, previously moving together as a debasement trade, is the most important structural signal in the current market. If capital continues migrating from gold to Bitcoin in macro risk-off environments, you are witnessing a historic reallocation that will play out over years, not weeks. If gold recovers and Bitcoin falls back in line with it, the March 4th divergence was noise. If gold continues to underperform Bitcoin across multiple macro data points, you are watching the beginning of Bitcoin's permanent transition from speculative asset to reserve asset in the making. $530 million. Gone in 12 hours. Not because of a hack, not because of a regulatory crackdown, and not because of a fraud, but because the White House put out a 12-word press release, and the short sellers had been watching the price while the smart money was watching Washington. The Worsh nomination, the Lummis statement, and banks offering Bitcoin alongside dollars. The United States government holding the largest sovereign Bitcoin reserve in the world, and gold falling as Bitcoin surges. These are not separate stories. They are the same story told from 5 different angles. The story is this. The United States government has decided, institutionally, legislatively, and now monetarily, that Bitcoin is not a threat to be suppressed. It is an asset to be integrated. And when the most powerful government in the world makes that decision, every short position built on the assumption that Bitcoin was still fighting for legitimacy becomes a trade built on the wrong thesis. The bears were not stupid, they were just looking at price, while the smart money was looking at Washington. If you are still watching right now, you have the exact kind of discipline that separates the smart money from the retail noise. You know what? You are a true legend. So drop a comment below with the exact words, "I am a legend," to let me know you made it to the very end. I want to know who the real ones are. Hit that subscribe button, leave a like, and keep doing the work. I will see you in the next video.